Shares of Paramount are moving higher after reporting a profit within its streaming division for the first time. The company also announced plans to lay off 15% of its U.S. workforce in an effort to cut costs ahead of its merger with Skydance Media. For a deeper dive here into the latest quarter, we're joined by Jason Bazinet, who is the Citi managing director. Jason, great to grab some time with you here. I mean, as we're really kind of diving into what we're seeing in the streaming landscape, where is Paramount trying to position itself, and where do these results kind of lay out the reality of where it actually is?
Well, I think the themes we've seen have been pretty consistent across the space, which is better streaming profits, but that's come with larger linear losses. And so the trade-off that the street's looking at in aggregate across these companies, isn't super bullish. The one thing that I would say that we keep looking at is not so much the net ads or the profits. What I keep focusing on is what is the consumer paying to spend an hour on any one of these apps. That is the most important thing, because what it tells you is, are these being viewed as really linear pay TV substitutes or not? And there's very stark differences across the streaming landscape.
Jason, when you take a look at these results here, there was a lot to be encouraged about, but then when you take a look at some of that weakness, obviously Paramount writing down the value of its cable TV business by about $6 billion. This comes on the heels of what we saw from Warner Bros. Discovery earlier this week. My question is, why do you think we're seeing this now? Should we be reading into the timing at all?
Why are you seeing it now? We don't know the specific tests that they're doing to go through these impairments, but I think what we do know is that all of these companies went through mergers, right, a couple of years back, and so you had to sort of assign goodwill, right, based on the equity values at the time that those mergers occurred. So I don't view the write-downs as being particularly meaningful, because the street is reacting in real time and adjusting the equity value. This is sort of a backward-looking lagging indicator on some goodwill asset that sits on the balance sheet that's sort of irrelevant. Having said that, I mean, what are the impairment tests that they're doing? They're looking at what is the trajectory of the linear business, what is the both on advertising and affiliate, and those trends aren't good. And so I'm sure the write-downs are absolutely appropriate, but not something that should really bother the street, because each quarter they're adjusting to the real-time trends.
Is it something in the write-down that you, for Warner Bros. Discovery, might attribute to the loss of the NBA, and then similarly for Paramount, attribute it to the Skydance deal even?
No. Well, Skydance for sure, no. On the Warner Brothers side, there's no doubt if they do end up losing the NBA, there would be some diminution to the value of the linear business. But they're caught up in litigation, so I don't think that they would inject the NBA contract, into their forward commentary until we have legal clarity on where those NBA rights are ultimately going to land. So I think that the short answer is no and no.
Jason, when you take a look at the fact that we did see a turn in profit for the streaming business for the first time, how encouraging is this? Is this something that you think you're confident, and maybe it's way too early to tell, but that this is going to be the start of a longer trend?
Oh, I think it is. I think it is for sure. I mean, what's happening underneath the covers that we don't see is these media companies are going in and negotiating with advertisers. And the advertisers are saying, oh, I don't want to buy as much of your linear time. I'd like to buy more of your streaming time. And so this is sort of, you squeeze one end of the balloon, right? And the same thing is happening on the affiliate side. They're going and negotiating with the distributors, and they're saying, hey, can you give me a little bit of relief on the linear affiliate fee, but I'll pay you a higher wholesale price, right? So the trends are positive. They're going to continue, but I think the street appropriately has to look at the composite picture, because some of these dollars are fungible across the two divisions.